Watchlist creation using the TrendPredator trading tools, in the main the TrendPredator Pro. And this here is my watch list. I've got an alarm that is set up for this watch list, being the New York session, TrendPredator Pro. Okay, so what that means is on my watch list, which are these pairs, from 9 a.m. onwards, so in the next couple of minutes, I'm likely to get some alerts dropping into my log. And that enables me to um, sit back, relax, let the TrendPredator do everything for me, and alert me to pairs that could be potentially setting up for my trading window. So, very useful tool that. Um, and the TrendPredator Pro does all of the analysis for me to the point whereby I really don't have to do anything at all apart from check out the setup signals that it sends me and marry it up to my go-to trade setups. Um, how is the market set up on the day? So, for instance, if we look at this here, this is the Deathline setup. If the TrendPredator fires a signal to me and the market, the structure of the day looks something like this, then that could be something of interest. So let's look at dollar yen just as an example. Um, dollar yen, USD, JPY, Rwanda, which is the chart I prefer to use. Let's open this up. So, for instance, in Asia, not I didn't take this trade by the way. It's not in my trading window, but um, this is an inverse. Well, let me. So that's what I was showing you. Let's go down to the inverse of that. So the other way around. So as you can see, it's and I don't know whether you can hear the indicator sending me the signals, but I've just been emailed these two setups here on the right. So they fall into my email, they come to my phone, and they drop into Trading View on my desktop. And we'll get to those in a minute. They're on my watch list. So as you can see, the Deathline setup here, uh, whether it's Asia, London, or New York, this occurred as being, let me pull that to the left. There you go. Okay. So as you can see, this is Asia, London, New York, but I have to shift it across because I was in Asia looking at this. So in Asia, over here it says London. So if you imagine that was London, but it's basically 3 sessions in a row. Cut long story short. So 3 sessions in a row. What I'm looking for are 3 session setups. Okay, I want the market aligned in 3 sessions, and then I'm taking my cue in the third session. Okay, my trade happens in the third session, so it's a 3 session setup. So Asia in this case was New York, so New York with that drop, breaking the previous day low. All right, so it broke the previous day low, which was Thursday's low. So it broke the previous day low. That becomes the death line. And then we got this coil around, well, above that death line. It's like a head and shoulders pattern, if you like. Okay, so there is the break of the previous day low over here. Then it's using that as a baseline. All right, trapping longs to the trapping shorts to the downside. And then this here, as you can see, perfect example. Not quite textbook perfect, but thereabouts. No, it is. It's absolutely perfect. Exactly in line with that image. and then you get the blow off. So your trade is on the breakout. So this was a London traders could have benefited from that for their trading opportunity. All right, so that's an example of what I'm looking for. So as you can see, the TrendPredator Pro flagged that trade setup. Now it did so, let's get rid of this now. It did so early on in the day when it came back inside, I believe. Should have been back inside, yeah. So if we go before that was flashing, so in the open of Tokyo, so much like what I'm having to do for the US session, um, in the open of Tokyo, it was giving us a signal to go short. And the reason why that was, if you look at everything, everything's bearish. Okay. Um, that was due to New York breaking the low of the previous day. So that there was a short. Um, I mean, in fact, it might have even been doing it earlier on, but we're not talking about Friday. But I just want to, I mean, this is real time, so it's going to give you setups based on real time price action. So, point being is, I came into Tokyo and I was looking for a potential continuation trade setup to the downside. But was the market set up for me? Did I have a setup to have taken that? Because essentially there was a setup on the session on Friday. You got the pump, the coil, like a death line setup on Friday, on the day itself. You got the pump in Asia, you got the London coil, okay, and then the death line was the Asian low. So in the previous um, PDF, I was showing you we were using the previous day's low as a death line, but in this here, we can use the session low, the Asian session low as the death line. It's fractal, markets are fractal. So what happens on the days can happen on the day itself. And that there was a death line set up to go short. Okay. So over here, as the market broke below that London low, as the market broke below, let's see, over on that candle there, in fact, not that one. This here would have been the Wall Street Open. So it's not something I took. I mean, I don't trade dollar yen myself in New York anyway. But that could have been an entry, but then you're trading around the Wall Street Open. It's a bit volatile, probably not the easiest to have taken, because it could have quite easily used that death line as a support and pumped. But anyway, it dropped, and that was the trade setup. So this indicator is not going to pick up on that because we've got a fake out low on the day. So it doesn't like that. You don't want to trade into a market that's already taken out the low and then moved up. All right, so the indicator didn't pick up on that. I thought it did, but I missed the fake out low point. So anyway, I'm starting to digress a lot here, but I'm just trying to emphasize that just because the indicator throws out a setup doesn't mean we're going to take it. It depends on how the day is set up itself. Okay, so this indicator is a great indicator for anyone that is using levels and wants to trade with the trend and use momentum as part of their strategy, because it does all of the legwork for you. It tells you where the trend is, who's in charge, the bears or the bulls, where the momentum is, why the momentum is there, due to the levels that are being broken across the time frames and the confluence of the time frames, bearish or bullish. Even gives you a suggestion for a trade setup. So for instance here it was telling us at what point, I believe on the breakout of Thursday's lows, it was saying, hey, there's an opportunity here because the time frames are aligning. So you've got trend and momentum in your favor to take a continuation trade below Thursday's lows. That's essentially what this is saying. So if you've taken that, whatever your entry criteria is, there is an opportunity. If you're a day trader, that's enough movement to make money. Okay, there's, what was that, 50 pips or thereabouts. So plenty of room to make money in that. Now, it depends what resonates with you. So you can pick and choose what setups you want the indicator to give you, right? So if you prefer to buy, then that wouldn't have shown, because what you can do is you can actually go into the settings and turn off the 2-star setups, for instance. You can turn that off. You can turn off the breakdown setups, all right? And you might only want the fake out low setups, which is essentially what this is here. Right, so it depends what setups resonate with your strategy, and you can configure the indicator to work in line with the way that you want to approach the market. So the dollar yen then went from being a bearish setup because it was still below Thursday's lows. So it's still suggesting that this can go lower. Now it's down to traders as to whether that resonates with us as an opportunity or not. And what I use this indicator for is to give me the context of the market. Prospects here were of a continuation to the downside, but I want the market to show me what it wants to do. So now we've got the lows of Friday to contend with. So although we're below Thursday's lows, which could be still resistance, so I'm bullish above, bearish below that level, Thursday's lows. So currently bearish below, but do I want to sell into the low of Friday? Probably not. What I'd want to do is wait to see if that would break, because it could act as support, so bullish above, even though the context is bearish, still I'm bullish above that low. It could be support. Well, not necessarily bullish, but I don't. Okay. We had no support. There was no close. So I'm using Friday's high and low as a box that we're trading either out of to the downside or above, or I can use Thursday's level. So I'm shrinking my box now to Thursday's low as a high of my current box. So if I break out of that box, then great to the upside. If I break out to the downside, then great. So that's essentially what I'm doing here. So although the indicator was giving us a short, it's now giving us a long. Why? Because it's taken out the lows, but it's closed back inside. And that is bullish because it was not only Friday's low, it was last week's low. So the indicator now derives a bullish thesis. And because we've got 3 days of shorts and 3 weeks of shorts in the market closed, okay, that is signifying prospects of a move up and deceleration of that. And now that we've got the 8-hour aligning with the daily and the weekly, that's bullish. Now, does it mean I'm just going to take it off the bat? No, I'm not. Should have done in hindsight, but when I say that I should have done, I'm asking myself, what of the playbook setups am I trading from? Okay, which one of these schematics, if I'm looking to reverse, do I have any of these that I can trade from? And which one of these do I prefer to use? Okay, so in some respects, we had do we have the 3 sessions of drop? Not really. Well, we sort of did. We no, we didn't. I was going to say we did, but we didn't really. I mean, we could have said, I'm looking at this here, we could have said that this London box uh, was a prospect because it was sort of a death line box, but it's not really set up how I want it to be set up. All right, we had this outside box and then this inside box and this drop. It's not ideally what I want to see. Okay. So I didn't have the session set up as I wanted. Okay, it could have easily dropped and given us a signal to go short again. So what I'm waiting for is the market to show its hand, to start building up order flow and put in a low. Right, so I want that to be the low of the day, and I want it to be locked in. So in order for that to be locked in, what I need is to be seeing that the price is respecting levels. Now, there's the closing price from the previous day. So we got this closing price here that's dropped to that day's closing price. So not actually seen my indicator do that before, which is a bit strange. Not sure why it's doing it. Anyway, and as you can see, it's sort of using that as a support base. So I'm starting to build confidence now in what could be a death line setup. All right, as this is starting to take shape as per my playbook. So there it is. There's the death line setup starting to take shape. And there you go. And off it goes. All right. So that is what I'm looking for on the day today. So I've got these signals that have been fired out to me. Now, my job is to see whether or not I've got plenty of time. I've got 40 odd minutes until my trading window to monitor how the price is behaving over the last 3 sessions. So um, now that we've come into 9 a.m., we've got a new 8-hour box, which is a new session. So for me, the London session ends at 9 a.m. New York, and New York is officially open. The official session of New York is opening, and I'm in anticipation for dollar yen to continue higher because we're still above that fake out level, the death line, which essentially was a fake out, wasn't it? It's moved back inside of Thursday's low. So we've got a fake out low. All right. So while above that low and out of that ascending triangle, we are bullish. Okay. So London traders can be holding onto their position in anticipation of a continuation, especially if we break out of the London high, which is around about 149, call it 149.90. For a test of 150 and beyond, coming into the breakdown level 150.20 for a short squeeze as per the Deathline setup. Okay, so I hope that was helpful, and let's get into the watch list then. So we don't have dollar yen as a pair that I trade in New York. It's an Asian and London session pair for me, which would make sense because you've got the Asian market engaged with the yen. So what I'm looking for are parabolic explosive moves from my watch list, and therefore my go-to watch list will be those that tend to give you um, higher volatility. Um, so I'm just setting up my watch list as it should be. Okay, don't know why that's doing that. It should be. Strange. Seems to be an update on the Pro for some reason. Okay, pausing the video while I update the index, the indicator. Right, and what we'll do is we'll just go through what's being fired at us. So we'll start off with dollar Swiss. Now, in fact, we won't. We'll look at the. We'll go to the ones that we want to look at first that are more likely to give us the parabolic explosive moves. So oil being one of them. As you can see, we've got a mixed bullish bias to the upside. You've got the weekly, the daily, and the 8-hour conditions bullish. We've got 3 weeks of drop to be buying into. All right, so let's look at that on the chart. This here is a chart of indicators that I've used to help me quickly analyze the flow of the market in line with what the trend predator is throwing out to us. So as you can see here, right, since walking away from the screen back to it, well, there it is, it's come back now. So we've got this 1-star setup. It's based around the breakout scenario of the Asian high. Okay, so we're bullish above the Asian high, bearish below it. So it's an outside range in London. So really, having said that, even though somewhat bullish above it, I'd rather be on the outside of the outside range. We can be taking a long, but then only to be into resistance. So if we get above, I'd rather be taking above that for the long. So it would likely flip from a 1-star setup to a 2-star setup if we broke above that level. But even then, again, as discretionary traders, it's down to your preference. I would rather be trading inside of the value area from Friday, because that can otherwise be a resistance. So if we're accepted into that value area again, which is that grey, the dotted grey box, there's the high, this is the low. So inside of that range, if we get inside of it, because we opened outside of it, if we get back inside it, there's a probability that we move to the other side of the range and to retest the breakout level from Thursday, where Friday broke down. So if we get back inside of that box, we could be squeezing back into the shorts. Okay, because we've got 3 weeks of drop. 3 weeks of drop, well, much more than 3 weeks of drop, but 3 consecutive weeks looking back. 1, 2, 3. This week being the third week of drop because we've broken yesterday's or last week's low, Friday's low. So that's the third breakout week. 1, 2, 3. So deceleration of that prospect for a move up. So that's on our radar. So we've got oil on our radar for a long. But what's the other side of that? The other side of that could be if we break back below the lows from yesterday, from Friday rather, then we'll have a breakdown condition on the daily chart. And also, if you note, Friday was a first red day. We had a series of bullish days and then this red day. So that could be wanting to continue lower. But let's wait and see if the market shows us that that's what it wants to do. So if it fails to move up, so what it might do is break up, come back down, give us a fake out high of the London box and of Asia. And then if we break below the lows of Friday, then that could be our fuel to come lower. But at the moment, we're of the mind that it could be going up, but I don't want to do anything until we break the resistance, which could be Friday's value area low, and then to look for a move on the inside of that value area up into the lows and the monthly breakdown level, as it were. So the breakdown level being January's lows, which aligns nicely with the breakdown level from Friday. So that could be a nice target to the upside. So nothing to do on oil until we break. So I can set an alarm till we break above that level. Okay, so that's oil. So we mark that as bullish for the moment. And we can make notes. So bullish in Friday value of bullish above Friday value area low. Bearish below low of, or Friday's low, Friday low of day. For first red day sell-off continuation. Okay, so that's oil on the watch list. Now we just go back to our log and we look at the ones that we want to be looking at first. So the index is oil, gold, silver. So let's look at the US 30. What's happening on the US 30? Over here on the left, we can see that it's in a downtrend, a tentative downtrend, so a weak downtrend, because we've actually got 3 days of shorts. So we know it's a weak downtrend because it's yellow. It's not red. DT stands for downtrend, and it's yellow. So it's sort of neutral because of those 3 days of shorts. But it does look like a heavily bearish constellation of time frame conditions. So let's have a look at the chart. So on the chart, we can see that we're inside of Friday's range, but we're below all of the key levels at the moment, bar the monthly chart. So the monthly chart, so look at the monthly chart, we can see the levels on the month. There's the previous month's closing price, there's the high, and this is where's the low? All the way down there. So we're in the middle of that box, so I'm not really concerned. We can be going lower or we could be going up. So either way, it tells us that we could be going up more than bearish because we broke below. I'm not going to go back and look at it. We got a fake out low on the month. So we broke down in January, we broke December's low and then we moved up, or it might have happened this month. Yeah, so it happened last month. January broke the low of December and then it moved back up. Okay. So somewhat bullish on the monthly chart. Neither here nor there. We're right in the middle of the range. On the week, we are inside of last week. Last week was a bearish week. It was a first red week as well, following a series of up weeks. As you can see, all of these were up weeks, the green arrows, and then we got this red arrow. It shows us that this week was the first red week after a series of up weeks. That's bearish for the week ahead. You'd anticipate the continuation of that weakness. So we got a mixed situation on the weekly and monthly chart. But as I said, we're not paying much attention to the monthly chart, just the weekly, because we're right in the middle of last month's range. It could go either way. On the week, however, we've got bearish momentum. The trend is down. downtrend. That's the trend. We are below the previous week's lows, so it's a downtrend. On the day itself, we've also got this downtrend. But it's 3 days of drop, right? Counting back Friday, Thursday, Wednesday. So perhaps we need a more of a long squeeze before we get the continuation, maybe later on in the week, of that bearish drop on the weekly chart. So perhaps for the day ahead, we could be looking for longs. But at the moment, the indicator is telling us that everything is bearish. So we're looking for shorts. And we're looking for shorts because we are below the Asian high. Okay, so we've got this move that moved out of Asia in London, but now the offers are coming in again, and we've got bearish momentum coming into the market. The Wall Street Open fueling that drive lower into the Asian range. Okay. However, what now is happening is that we've taken out the London low, because remember we're in a new box now. So this is the London box that closed at 9 a.m. So in New York, this is a new box. We've taken out the lows and we're moving back inside of those lows. So that's bullish, all right, which conflicts with the bearish signal that we got. So we need to wait to see how this pans out. If we close back inside over the next 15, 20, 30, 45 minutes, then that will be a fake out low, which is bullish. So it means that this table is null and void. It doesn't give us anything. But if we break below it, if we close below that low, it will remain as a bearish setup, having faked out of Asia and moved lower, in line with the first red day from Friday and the series of drops and below Thursday's low, with a view to take on the lows of last week. Okay, is it on my watch list? I'm not going to favor it, I don't think, because of the 3 sessions of drop. On the other hand, if we were to break the low, more inclined. So we'll have it on our radar nonetheless. What I'd want to see really at this point, however, would be the trap being set for a pump up to re-break the Asian high. So trapping traders short, coming up again, and then the drop. Because then we've got traders trapped on the downside, squeeze, take their money, trapping these traders that have gone short, take their money, and then the real move in my trading window. But we'll have to wait and see if that pans out. And that would be a parabolic session setup in line with the first red day. But then we've got this fake out low to contend with, which isn't ideal. So I'm wondering if the trap's already been set. Death line. Or maybe just take the breakout of the London low, which is what we're starting to see here build up. But again, I'm not going to do anything until 10 a.m. Okay, so adding my note, fake out high of Asia for a parabolic session sell off. And we'll now look at gold. What did gold give us? Gold was a two-star bearish fake out high reversal into a downtrend setup that was flashed earlier on. So it's quite some time since the signal was given. Let's have a look what's going on. Well, in fact, gold is something I wasn't even going to entertain today, I don't think. Let's see what developments have occurred since my early session analysis. Don't know why this keeps needing updated. Okay, so what I established that we'd already done a lot of the ATR. We've got the weekly highs as a resistance. Don't really want to trade into that. Since that analysis, we came up into it and it did respect it as resistance and sold off. So perhaps that's why we've now got a fake out high. Okay, so yeah, in fact, this could be now a setup to go short because we've got the fake out high on the week, the day, 3 weeks of longs to sell into. What we need is a fake out high in the 8 hour, and in fact, we've got a fake out low, which is not good. The fake out high of Asia was good, but again, like the Dow, we've taken out the low of London, and that's bullish. So can't really do anything with that unless um, we get a convincing fake out high of the Wall Street open high and Asia again. So, if, like with what I'm looking for in the US 30, is I'm looking for a retest of the Asian highs, fake out high, and then we can go short. But bear in mind, we do have a fake out low, so a bit tricky, but we could give it a go, right? So you could start off with a small position, then add to it as it gets confirmed on the way through to go short. So we'll have gold on the watch list as for a short. All right, so there's plenty of pairs to contend with. Don't need more than a few to keep an eye on. So we'll leave it there. Set my alarm for that. It's really going to get done, isn't it? Not quite. So fake out high Asia for sell off. Parabolic session. Um, Having said that, I don't really like the support at the closing price here, I'm afraid. So that might make it removed from the watch list. Maybe a death line below it. Yeah, we could regard that as a death line below. Okay, sell off below, sell off for sell off, but watch closing price as death line support. Okay. Okay, so I hope that was insightful, showing us how to use the TrendPredator Pro and being mindful of how the day itself is set up in terms of sessions What patterns do we have? Where is the trap? So the trap at the moment could be up high if we get below the closing price.